Well, for a change we have good news from the political front. Let's look at the good news, then discuss the less than good overall status of the financial world, to finally look at what to do to get ahead in a profitable way. This is Paul with OUTPACEsys with your report for 21st of November 2008. So the good news. The rumor leaked yesterday from President-elect Obama's headquarters that Tim Geithner, President of the Federal Reserve Bank of New York, is likely to become Obama's Treasury Secretary. This created instant excitement after weeks of uncertainty on who would be leading the efforts to revive the U.S. economy and solve this financial crisis. The excitement translated in a very lively bull market surge at the end of an otherwise dull and boring day. This is the 5-minute chart of the Dow Jones Industrial Index, showing this cheerful uprush at the end of the day. Now, that was nice. It made good headlines all over the media, and, as we said, made the trading day a bit more fun yesterday. But for now, we can only look at that as a positive start to a lot of work that needs to be done in the upcoming months to fix this deeply dented financial world. The Geithner jump was nice, but brought back only about half of the loss that we had this week in the Dow. And he did that only a few hours after reaching yet another historically low at the same day. So let us hope this is the beginning of the good times to come, but let's not forget we have a long way to go before the sky is blue again. The cold, unhyped weekly history of the three indices is in this performance comparison chart. And this is the year-to-date performance history for the indices, with the S&P down 48%, the Dow Jones down 39%, and the Nasdaq 100 down 44% for the year. This not-so-positive situation is why we keep saying that our individual investment plans need to adapt to this deeply deteriorated situation, and the old buy and hold mantra should be left aside for now. The long-term bearish trend we've been dealing with for almost a year now is not broken yet. What did we do this week then? In the equities portfolio, we had one week-long trade on the Qs, the QQQs ETF that tracks the Nasdaq 100 index, which was actually triggered the previous Friday, where this week's precipitous fall began. The trade utilized the November 32 put option QAVWF. The table shows the trade delivering a very exciting 148% profit this week. A $2,000 trade would have bought 7 contracts, and the initial $2,000 would become $4,716. If you would like to follow this kind of trades, make sure and visit our site at OUTPACEsys.com and see the available options. The link is on the side of this video. While the Dow Jones recovered half the week loss yesterday, the other major indices did less well, as shown in this weekly chart, where yesterday's bounce looked less dramatic than the one in the Dow. Bonds, on the other hand, continued their move up, as shown in this weekly chart, once again confirming the inverse relationship between equities and bond markets. The weekly performance chart for sectors showed the unbelievable loss of the financial this week, minus 23%, while the other sectors lost anywhere between 0 and 10%. On a yearly view, financials are down approximately 70%. Consumer staples are the best of the bunch, down only 20%. International equities are also facing tough times. Japan is the best, down about 40%, and Hong Kong the worst, at minus 45%. Crude oil continues its precipitous fall, as shown in this weekly chart. Our alerts continue to be very bearish, as shown in this chart. Gold instead is having a moment of glory with a nice bullish breakout gapping up on Friday. We have to watch this carefully in the next days to see if and when it is time to start long positions here. Stay tuned for our alerts at OUTPACEsys.com. The positive performance of gold is shown here, where we see it leaving everybody else back in the dust for the week. This jump has also turned gold into the best performance in our major markets comparison chart for the year to date. This is it for the week. Thank you very much for checking in with us again. If you enjoyed the report, we hope you will share this video with your friends, as well as our website OUTPACEsys.com. The link is on the right of the screen. Please visit OUTPACEsys.com, where you can find past editions of our weekly reviews and full details on our trading system, our approach to the market for incredibly profitable investments, and the services we provide. As usual, we'll see you online next week. Happy trading!